Good evening, everybody. Welcome to the session. आज का जो session रहेगा, we are going to do it on option strategies for union budget. So the topic of today's discussion will be option strategies, which will be for a event day, and the event which we all know is the union budget. Right. So before we start, let me introduce myself. My name is Hitesh Chotalia, and I have close to 25 plus years experience in markets, both in technical analysis, research, as well as option strategies. Right? So let's straight away go into the sessions. So overview, आज हम लोग क्या topics cover करने वाले हैं? What is going to be today's discussion? So let's first briefly, I'll tell you about that. So there is an event coming, which is the union budget. All are waiting for it. The volatility around there is high. Up intraday movements देख रहे हो, to 200 points move on an intraday basis on Nifty and 400-500 points in Bank Nifty has become normal हो गया. So what we know is the volatility has started appearing. And what does an event day volatility means? उसका मतलब क्या होता है for option trader? That we are going to understand. And very important is how to measure volatility. See, volatility का भी एक measure होता है. And when we say measure volatility, we measure volatility we have 3 studies to measure volatility based on ATR, straddle price, and VIX. But I would pay prominence to both straddle price and VIX. Third is in an event day, the one study, एक study आपको बहुत carefully देखनी चाहिए, और at any point of time you should be aware of it, is implied volatility. Options में जिसको हम IV बोलते हैं. Always event day में एक बहुत strong possibility रहती है कि there will be a volatility crush. So what is volatility crush? वो भी हम आज समझेंगे, and we'll understand what's volatility crush. And in terms of option strategies, क्या क्या strategy हम apply कर सकते? We'll learn, understand, and explore all. Broadly in options, strategies 3 part में divide होती है, which is directional, which means either you are bullish or bearish. Non-directional, which means you are neutral, you are neither bullish nor bearish, you are expecting a range, तो उसको non-directional बोलते हैं. And third is for investors for portfolio protection. Right? So we will do in detail about all the points which I have mentioned. But before we, again, as I say, pay very high focus to what we call implied volatility and volatility crush. As we go into the session, I'll discuss more about it. And most of the strategies which we are going to discuss today can all be done at a click of a mouse in the Stocko InCred Money Insta Options platform. So every strategy we will construct in the Insta Options platform or by Stocko InCred Money and see the risk profile, the return, and all the strategy inputs in it. Right? So before I go, I have been asked by the organizer to take a feedback or a poll. Yes, Deepak ji. Before I start, just do it for next. It will just take 10 seconds. Yeah. So it's reading out on your screen. Did you attend our previous webinars? See, these webinars आपके लिए to share our experience, and let's all benefit from the knowledge sharing what we are doing in this webinars, which is on charts, option strategies, event day strategies, and also on the Stocko InCred Money Trading View platform, how to use as a professional trader. So Deepak ji, it says we have got the poll. Yes.
Yes, sir.
Done.
So 73% voted till now. So would request the remaining 24-25% to vote, please.
Yeah. So see, these webinars for you, you have to be interactive and you have to vote for it, because if you don't give your vote is a feedback for us to how to construct it, कैसे आगे लेके इसको जा सकते, कहाँ का आपको डिसीजन मेकिंग में दिक्कत आ रही है, वो हिसाब से हम वेबिनार स्ट्रक्चर कर सकते हैं. So these webinars are for you, and if everybody does the poll, it will help all of us. सबको इससे benefit होगा. So right now the percentage which I am seeing in front of my screen is only 84% voted. Will not another 5 minutes, Deepak ji, and we will start the session. I am starting the timer at 5 seconds. Yes. Very humble request to all the participants, 17 who has yet not voted. Now I can see it's climbing. Done, sir. We can remove the voting and start the webinar.
Sure, sir. I'm just ending this poll. Thank you.
Yes, yes. Yeah. Budget is an event. So I have done the event day movement of Nifty right from 2011 till 2025. So 26 will be known for us this week. And if you see from 2011 से लेके 2025 तक अगर हम देखते हैं, हम एक्सपेक्ट करते हैं कि बहुत मूवमेंट्स होगा बजट वाले दिन, इंट्राडे वॉलेटिलिटी रहती है, बट अगर क्लोजिंग बेसिस पे देखें तो द चेंज which we expect is very very nominal. So from 11 to 25 अगर हम देखने जाए तो जो हमने आईवी क्रश की बात की थी, जिससे ऑप्शन प्रीमियम कॉल और पुट में एक डिक्लाइन होता है, तो जिसमें न्यूट्रल स्ट्रेटजीज वर्क्स बेटर. सो द डायरेक्शनल वाज 2.4% in 2013. It closed down. In 2020, index closed down by 2.32%. This is Nifty when I mention index. And in 2021, एक 3.8%, जिसको हम एक रैली बोल सकते हैं, right? So अगर हम डायरेक्शनल मूव की बात करते हैं, that then out of more than 14 years of data, 3 budgets were only directional, rest were all neutral. That is where the IV crash comes into picture, right? Now, these are the few days candles on the day of the budget which I got for you for highlight, right? Which says that the intraday moves are very big. Intraday बहुत बड़ा movement आता है, which is close to 200 to 400 point plus. But net, if you see during the closing, market settles down. Okay, so that is where the volatility crush comes into picture. Question is assigned to me. Definitely, I'll take the questions during the markets. Right. So yes, as we go into the sessions, I'll explain to you in detail the IV crush part of it. I had a question from the participant. Is it okay? Fine. So let's go. And the first topic, as I said, we have to be aware of volatility crush, which is IV cools off. The IV का मतलब है implied volatility. Ahead of event, the implied volatility is high. So what does an IV reflect? Which is an implied volatility in options. So IV reflects us that market expectation of future price movement. See, ahead of an event, there's a big nervousness भी रहता है. Market ऊपर जाएगा, नीचे जाएगा. Investors are buying protection. If you are bullish, you are bearish, you are taking all the trades. So the participation activity is high. Second is, IV is high before the event, especially around annual budget. The implied volatility is high. Now, somebody put me this question: what is implied high volatility? अगर at the money where जहाँ पे निफ्टी चल रहा है, right? अगर normal day में उसका कॉल का या पुट का प्रीमियम 100 से 100 रुपए के आसपास है, अगर आज आप देखते हैं तो वही प्रीमियम 180 से 250 रुपए का, फाइन. So everything remaining same because of the event spike in IV, the premiums of both call option and put option are high. Fine. Are you seeing that? So that is what we call IV, right? Yeah, I got a thumbs up. Right? High IV are referred to as the inflated. We say call option or put option का भाव अभी चढ़ के है, which is inflated. Right now, the option premiums across the boards are highly inflated because there is a big spike in IV, and which is a typical behavior ahead of an event. एक बार event बाहर हो जाता है, which means event is out, the IV drops. This is where if you are new to trading and if you are just buying call and buying puts, right, and even if you get that 100 150 points move in your favor, still you will see that the call option or the put option has not moved up. In fact, it has come down. That's what we call IV crush. Now is it clear, everybody? I had 2 to 3 questions regarding that. Let me go to the question session. And once the event is out, the IV drops considerably. There are very rare occasions it has continued to keep on spiking up, but we are talking about a data point which says majority of the time it has fallen, and option premiums fall sharply. Right? So that is about volatility, which you should keep in mind. Right? Now, volatility is if the IV comes down, what we call IV crush or IV cools off. उससे benefit किसको मिलता? It's favorable for option sellers, those who are selling call option or a put option. It is unfavorable for option buyers. Why? Because the price of the premium cools off. So IV's crashing is favorable for option sellers and unfavorable for option buyers. Okay, keep this in mind when you are deciding to take a trade, which is or a strategy. Keep in mind the IV crush or the IV cool off on the event day. So typical budget movement is high intraday volatility. IV is high before the announcement, and post the budget possibility or majority of the time we have seen the implied volatility is cooling off, which means that the premium of both call option and put option shrink. So when it comes to measure of volatility, we have अपने पास 3 तरीके से measure of volatility कर सकते हैं. First is based on ATR, which is average true range. If you go to the Stocko platform and you type average true range, it will come. So right now, ATR is around 230 plus. So that means based on close, prices can either go up by 234 points or come down by 234 points. This way, we can हम लोग measure volatility कर सकते based on price charts, right? Second is very important, and you should be all about of it, जिसको हम straddle price बोलते हैं. In English we call it straddle price. In Hindi हम इसको जोड़ी भाव बोलते हैं. So straddle price is the premium of ATM call option and the premium of ATM put option. We add the ATM of call option and the put option, and the total which we get is straddle price. So a straddle price से भी एक range निकलता, which is very important given the day of the event. So you just subtract the straddle price from the close and add the straddle price from the close, you will get your range. Everybody clear about this part? The straddle price, give me either a thumbs up or a thumbs down. As I said, this webinar is for you. Right. So let's see, based on today's close, what's the straddle price? To see this, I'll take you to my platform. So I go to Insta options in Stocko InCred money platform, which is intra options. So whereas I'm just doing it practically, so you will be able to do on the day of the event, right? So Nifty has closed at 25,418. So जो at the money call होता है Nifty का, 5th February I'm taking, right? So at the money call of Nifty I can change the index from here. Yeah. So all you have to do is निफ्टी का क्लोजिंग है 25,418, तो 25,400 का कॉल देखना आपको और गो टू एड लेग और यहाँ पे 25,400 का पुट, जस्ट चेंज दिस टू पुट and keep both the expiry same. So after doing this, you go to the combined premium chart, right? So right now, what is the straddle price for at the money Nifty, which is 377, which means it's a big range, which means market can go up by 377 points or come down by 377 points. So all you'll be able to calculate the straddle price from tomorrow onwards. Give me a yes. It's very simple. आपको एटीएम का कॉल ऑप्शन का प्रीमियम देखना है, एटीएम पुट ऑप्शन का प्रीमियम देखना, दोनों प्रीमियम को ऐड करो तो हिंदी में हम जोड़ी भाव बोलते हैं, एंड इंग्लिश वी कॉल इट एज अ स्ट्रैडल प्राइस, एंड स्ट्रैडल प्राइस इज द रेंज, राइट? जनरली आप अगर एक्टिव ट्रेडर हो तो आपने देखा होगा एक्सपायरी के पहले 2 या 3 दिन पहले ये करीब 150 से 200 के आसपास होता है. Right now it is double of that, so that says that the implied volatility is high. Now everybody understood what do you mean by implied volatility is high, right? So the first thing you do is see the straddle price, and in the Stocko InCred money platform, which is Insta options, you can go to the combined premium charts where my cursor is right now. So you don't have to add or subtract. At a click of a mouse, you get it. So let me also write it down because I'm doing this webinar along with you. So right now the straddle price is 377. So everybody, have you got a measure of volatility के 400 पॉइंट का गड़बड़ हो सकता मार्केट में? Give me a yes. ये आपको फ्राइडे को देखना है क्लोजिंग पे. Yeah, I just got one. So that's where the volatility is coming from, right? So now if I go over here, Nifty, fine. So today if you see Nifty, there was a decent movement, fine. अभी आप देखो तो moves काफी बड़े हो रहे because the volatility is high. So that's where we come from, the straddle price range, right? After that, let's go to the options part, okay? The strategy part. Like at the start we said, हम 3 पार्ट में स्ट्रेटेजी को डिवाइड कर सकते हैं. डायरेक्शनल, which is either long तेजी, short मंदी, which is buy call, buy put, और नॉन डायरेक्शनल, which means हम लोग एक रेंज में मार्केट बंद होगा, it might not go very strongly up, no might go strongly down. And the third is how to protect your portfolio in case of such events, right? So when we are talking of directional, it's long call. So a question was assigned to me. I'm not able to see the question. Okay, I have a question. Which would be more accurate, ATR or straddle price? Fantastic questions. That shows how attentive you are. Because of event, I would put more weightage on straddle price. Is the question answered? I would put more weightage on straddle price. Done. So that was question from Mr. Sanjay Khopkar. Right. So if you are bullish on the markets on the day of the budget, if you have a bullish view, then with a limited risk, you can participate, which is a buy a call option. And here the only thing we keep in mind, we buy a slightly higher OTM. OTM2 means 100 points above the current price. So this is called a directional long call, which means your view is bullish. And if your view is bullish, you can go to the Stocko InCred Money Insta Options platform and see your payoff and your risk, maximum risk in the strategy and maximum reward, right? This is for bullish. If you are bearish, it's long put, which means you buy the put option. Again, if your view is bearish, you buy the put option slightly higher OTM2, which is 100 points below the current price. As a buyer of options, your risk is always limited to the amount of premium paid and your reward is unlimited. So with the limited risk as a directional trader, the two strategies which is available to you is long call and long put. Again, it's a view based, either you're bullish or bearish. Now, if I move away from the directional part, then comes the non-directional part of the options trading. In non-directional, which is a long strangle, which means आप एक व्यू नहीं ले रहे हो, मार्केट ऊपर जाएगा क्या नीचे जाएगा उसका आप अनुमान नहीं लगा रहे हो, आप न्यूट्रल हो. ऑल यू आर सेइंग इज मार्केट मान लीजिए 400 पॉइंट आइदर ऊपर जा सकता या 400 पॉइंट नीचे जा सकता. इट्स जस्ट अ रेफरेंस नंबर व्हिच सेज दैट you are expecting a move which is a substantial in either direction. आप एक बड़ा मूव एक्सपेक्ट कर रहे हो और मूव ऊपर भी हो सकता नीचे भी हो सकता. दैट मीन्स it's a you are not taking a view. In that case, it is called a long strangle. It's a volatility trade. Volatility can trigger on both sides. So you buy a OTM call option which is out of the money, which is away from the current price, और साथ में आप पुट भी बाय कर सकते हो which is OTM. Again, as a buyer of options, your risk is limited to the amount of premium you have paid and your reward is unlimited. So the long strangle is combining buy call and buy put, in which you are not taking a directional call. Let there be a movement either side, and whichever side it happens, you tend to take an exit. But here you have to keep in mind your break even will be on the upside your call strike price plus the total premium paid, and lower break even will be the put strike price minus the total premium paid. So these three strategies I'll again repeat because they, if you combine them, you form long strangle. First is buy the call if you are bullish, which means the risk is limited. Buy the put if you are bearish, the risk is limited. Why? A buyer of options, the risk is limited to the amount of premium paid. If I combine both, which means I'm not taking a direction, कौन से साइड मार्केट जाएगा वो मैं नहीं, मुझे भी नहीं पता है, बट उतना मुझे एक अंदाजा आ रहा है कि बड़ा मूवमेंट आएगा चाहे ऊपर चाहे नीचे. सो मैं कॉल और पुट दोनों बाय कर ले रहा हूं आउट ऑफ द मनी, और इसको हम बोलते हैं लॉन्ग स्ट्रैंगल. राइट, okay. After that, we can go to a neutral strategy. Neutral strategy will benefit if there is a decline in implied volatility. The first three which we discussed is if there is a volatility crash, it will affect you in a negative manner. Right? So those were the threes which we don't take into account the IV crush. Now, if I am expecting an IV crush and I'm expecting that market will stay in a range, and when I speak of range, the figure in front of me as of today's close is 377, the straddle price. Right? If I take 377 points from today's close, that means I can do a short strangle. Now, if IV crash and the premium of call option and put option shrink, that means you are on the sell side of the options, which means you are writing the call or writing the put, what we call sell. So there we have short strangle. In short strangle, we define the range, and I will define this range as the straddle price. Right? You can, there are traders who take 100% of the straddle price. There are traders who take 150% of the straddle price. So there has to be a measure. एक measure जो जाना चाहिए कि range कहाँ है closing के basis पे. अंदाज में मैं range नहीं define कर रहा हूँ कि 200 point ऊपर 200 point नीचे. No, there is a fixed math behind it with the straddle price. So I have decided the range 377. So I have noted it down. So I'll take this range as 400. Right? So let there be a 400 points range based on today's close and straddle price. If I take 150% of this range, तो 400 में और मैं 200 ऐड कर रहा हूं तो 600 पॉइंट हो गया, right? So either I can take from previous close 400 points up or 400 points down, or from the previous close 600 points up and 600 points down to define that अगर volatility होती भी है तो ये range के अंदर में होगी, right? It will not cross this range. That's where the strategy of short strangle comes in. Short strangle में हम जो ट्रेड ले रहे हैं वो एक डिफाइंड रेंज में ले रहे हैं, तो हम एक्सपेक्ट कर रहे हैं कि मार्केट वो रेंज में ही रहेगा एंड द वोलेटिलिटी विल कूल ऑफ, सो आई विल बेनिफिट फ्रॉम द कूलिंग ऑफ implied volatility in which the premium of both the call option and the put option will come down. So I'll sell a call option which is either 400 points or 600 points above the current price. I will sell a put option which is either 400 points or 600 points from the current price. Now, because you are selling options, the risk is unlimited and the reward is limited from the decay in the premium. The decay will over here, it will be a decline in the IVs, or at times decay is also theta, but we are not talking of theta decay, we'll fix to the IV crash, right? So this is how the short strangle strategy will be there, right? So now, if you are doing short strangle, you can go to the Stocko InCred Money Insta options and define it, right? So I'll do one for you, right? So let's now, because I want you to do this, okay? So I'll go to my platform. Just give me a minute. Yes. Right. So let's say market has closed here 25,400. As of today, if I add 400 points, it will be 25,800 on the upside. And if I subtract 400 points from today's close, अगर 25,418 जो आज का क्लोजिंग है उससे मैं 400 पॉइंट माइनस कर रहा हूँ जो कि मेरा अप्रोक्सीमेटली स्टैडल प्राइस है, तो भाव आ जाएगा 25,000 का, राइट? So my range is, I'm selling a call option, so I go to the sell over here, 3rd February, which is 25,800. This is just the strategy construction. And if I go to the put part of it, I'm selling a put which is 25,000. Right. So by going to P off, I get the complete picture of my strategy. So let me do it, then I'll explain. Right. So combined, if I now go to my P off graphs, right, it gives me at what price the profit and loss will be at a particular time. But more important is maximum profit is the premium which you will make. Kindly give me a hi or a thumbs up to say that you are able to hear my voice, see my face, and more important, to see the Stocko InCred Money InstaView platform. That's more important for us. Okay, done. So such hiccups do happen in the online version, right? We have not lost either on time or on explanation or on strategy. So where we paused, I'll start fresh. So the strategy which we were discussing was long strangle, right? So let me take you back to the strategy. Okay. So let me bring in, which is, sorry, short strangle. Okay. Now, a short strangle strategy is where I expect market to stay in a range, and the range which we discussed today was range based on straddle price, which is we added at the money call and at the money put, and we got 377. So either I'm selling out of the money call, 100% of the range will be, to round it off to the nearest, it will be 400 points, 150 points of the range will be 600 points. So either I sell a call option which is 400 points or a 600 points higher, or a put option which is 400 points or a 600 points lower. Right? In this strategy, I'll benefit if there is a cool off or the IV crush happening, which means IV comes down, cools off after an event. So the risk is unlimited because I am seller of the option. The reward is limited till to the extent of the premium I have sold. Right? So now let me go and show you this strategy on a Stocko InCred Money platform. So Nifty has closed at 25,400. If I take 400 points from the current price, it is 25,800. If it is minus 400 points from the current price, it is 25,000. So a strangle means I am away from the current price, both in terms of selling the call option and also selling the put option. So it is it's also called a wing strategy. Far away from the current price, selling call; far below from the current price, selling a put. And this word far has to be quantified. How far? The minimum it should be a measure of straddle price. Okay? And this is my payoff graph, and I can go to the combined premium chart, and you are selling both. So the premium cooling off is your return. Let's say somebody did this short strangle strategy uh, 2 days back. So I'll go into this Stocko InCred Money Insta option platform, which gives me the facility of a combined chart. This was today. Today Nifty opened at around this level, right? So this is where the premium was 152, and today the premium has come down to 130. So had I done this strategy at today morning, so the premium was 150. I'll round it off 150. Right? I'll just increase the font size so सबको दिखाई देनी चाहिए. तो मैंने 150 में ये जोड़ी बेची, which is I have sold the strangle, and today it has closed at 130. Right? Everybody now clear how you benefit from a decline in the premium of both call option and put option, and this might be very rapid on the day of budget. ये काफी rapid हो सकता है. Give me a yes, everybody. Don't be distracted by a brief pause which we heard. That's all part and parcel of online sessions. Fantastic your participation. Fine. Assuming आपने दोनों कॉल और पुट बाई कर लिया रहते, not knowing how important or the key factor right now is the implied volatilities with the direction. Market ऊपर था, fine, but call में भी घटा, put में भी घटा. अभी कितना घटा, I don't have to worry about it. I just see the combined premium chart. I have sold at 150, and right now it has closed at 113. 2 days back it did spike up, it was 300 rupees, right? So now if you are doing a credit strategy जिसमें हम call put दोनों बेच रहे हैं, with hedge or without hedge, fine. Without hedge your risk is unlimited, with hedge you limit your risk. Always get into the habit of watching the combined premium charts rather than your M2M profits or losses, right? Agreeing everybody? How many of you start using it this way? And it's such a beautiful interface in the Stocko InCred Money Insta Options platform. At a click of a mouse, both the editions comes, and I can see it in a graphical format. What more a traders need in his trading life? Something which is represented on the price chart, and there we have. So that's what we call a short strangle. Any questions on short strangle? Because this is where the brief pause happened in the this thing, and it is a neutral strategy. Right? And to short strangle, see, the risk is unlimited because you are selling the both the call option and the put option, the wings part of it. Now if I put a hedge in it, everything remaining same, I add one more leg. Short strangle में सब कुछ as it is रहता है, मैं और एक leg अगर इसमें add कर दूं, तो which is a hedged leg, it becomes iron condor. So now in iron condor we are selling the options with a hedge, both call and put. So in iron condor, what happens, friends, is that आप एक range define कर रहे हो, but I can be wrong also. Na? It's a event day. There's a high volatility. It can expand also. Right? Market can spike up substantially. It can cross the straddle price 2x, double of that. Right? So I need to be hedged. So that's where the neutral strategy with a hedge is iron condor. In iron condor, what happens is the same as short strangle, which is we are selling the OTM call, selling the OTM put. Again, I repeat, take into consideration minimum you are selling is high above the straddle price. And if I'm selling the OTM call option as a hedge, I'm buying a OTM call. Let's say I sold OTM call at 25,000. So I buy 25,200 call option as a hedge. Or I sell a OTM put option, which could be, let's say, 24,500. So as a hedge, again, I buy a put option 200 points lower, right? So that means I'm taking a hedge around it, right? So it's a four-leg strategy. Nothing to get confused from four legs. It's very simple. I'll show you how to construct at a click of a mouse, right? And we will see, had you done this, what would have happened? We saw in short strangle, it was in my favor today. How many of you noticed this short strangle? It was in your favor today. Give me a yes or a no, friends. Now we have all settled down. Yeah, I'll wait for a yes or a no, or a thumbs up or a thumbs down. Right? That will show me you are attentive. Right? Yeah. So now to this, let everything remaining same. This is what you have in front of you, short strangle. Now I go to my Stocko InCred money intra option, insta option platforms. I add leg. So I have sold a put which is 25,000. Can you see this? Now I buy a put option as a hedge which is 24,700, 300 points below. 24,700. Let me select the strike price. Done. Got it? So what I have done right now is, to my put option, which is a nick, which was sell, I have bought and hedged it. Now I have sold a call, so I'll go and add one more leg over here. I need to hedge my call option also, right? So the call option which I've sold was 25,800, and I need to hedge it 300 points above. 8, 9, 10, 26,100 is a buy. So I go and select this strike price 26,100, right? So now can you see it's a multi-legged strategy, which is a four-leg strategy, right? So I'll remove the earlier. Let me clear the drawings. Yes. So it's a multi-leg strategy, which means it's a four-leg strategy. And if I see this thing, the max profit, the max loss, the reward to risk ratio, the break-even points, the Vega part of it, IV is based, the IV crash happens based on Vega, fine. So this is it. So this is where market opened today. Had I done an iron condor, which is sold both calls and puts and taken a hedge, let's see where market opened today, 9:15. Market opened here. Let me put an arrow over here, fine. So 9:15 market opened here. Had a trader done an iron condor, the price at that point of time was what? Why I'm highlighting, you have to see how premiums decline also, fine. So I'm not getting, just give me a minute. Yes. So the premium over here, can anybody speak out how much it was? Yeah, I got it, fine. The premium over here was somewhere around 100 points. Okay. Right now it is 70. So are you seeing, if I took a neutral strategy which benefits from prices trading in a range, and plus I have also taken a hedge. So 100 today, we have 76 as a closing. That's iron condor, which means if I hedge the short strangle, it becomes an iron condor. Any question about the strategies, friend? As the organizer, Mr. Deepak, he has told me I can take questions after the strategy is explained. And what a beautiful platform we have with us, which is Stocko InCred Money Insta option. Just click of a mouse, add your strikes, and either you can go to the payoff to see your payoff graphs or come to the combined premium, because if you are seller, all the premiums have been combined in one charts. Got it? So I can hover my mouse over here and I can select, see the strike price also. The expiry is 3rd of February, 26,500 call. And then again I have a call which is 26,100. So put is 25,000 and 24,700. What it has done is it's combined all the premiums. Okay. So I'll also focus on the payoff graphs of it, because if you are seller of an option, the spread is your profits, right? So from a short iron condor, let's move next. So these two are the neutral one with a hedge. Now, for investors, if you are holding a stock, budget is an event in which things can turn unfavorable if prices decline sharply. It could be a holding which you are having or on your investment. So the portfolio protection would be, I'll take a pause. I've got a question. How to put this orders? See, order entry and all, we will do it in separate session, friends. Let's focus on the learning and the understanding part of it. Okay, fine. So I got a yes. So in terms of portfolio protection, in terms of any stocks which you are holding, if it's an FNO stock, non-FNO stock, you can hedge it with Nifty. So that is called a protective put, which means you purchase a put option for the stocks which you own. So when you say put option, which is the strike price which you are looking at, it's always at the money, right? It acts as an insurance policy. If market decline sharply, you will see a decline in your stocks also if it falls. But at the same time, the put which you have bought might go in for a appreciation. So that way you are protected from some very sharp decline in price. Let's say in excess of 5 to 10% plus. There buying a put comes to as an insurance for the you have taken in case of the event turns out to be negative. And it provides a floor for the losses while allowing for the unlimited upside, which means you are holding a stocks, right? And you are taking a protection by buying at the money put. Note it down. Even I'm noting down, it's ATM put. Okay. So the premium of ATM put right now for a week's time is your insurance cost, which means if I go over here, I go to my platform, right? Let us now I'll remove all. Let's say for today, Nifty is at 25,400, right? If I go to the put option of 25,400, let me go over here. 25,400. Okay. So the premium of 25,400 put is 163 rupees. If you can take that as a percentage of the Nifty, you will get a figure of how much you are paying for a protection. It could be 2%, 3%. Just take 163, Nifty is 25,418 and calculate the percentage. So that's the cost or the premium which you are willing to pay to the markets in case the event turns out to be negative, right? So that's what we call protective put, and it's always, let's do it in ATM and not ITM or higher, because it's the delta part of it. So as we go further into next webinars, we'll discuss the Greeks also. But for today's webinar, let's keep it simple. If I have a stock and that stock is in FNO, the best way to hedge it is buy at the money put. that was about portfolio protection. So I don't have any questions right now. The questions on order entry is beyond the scope of today's webinar, sir. No offense, but yes, we will cover and at some date. Then I have question from Rajesh. The heading, I'll come to it. See, Rajesh, good question. I don't want to not answer any question. Brilliant question. Rajesh says the heading says strategies to profit from union budget. Absolutely perfect. But whatever is explained is general strategies. How is this specific for the budget? See, when it comes to options, there is no limitation to strategies, Rajesh, right? Okay. So the strategies which, see, I might have discussed 4 or 5 today. You might be knowing 10 or 12 today. Put those strategies in two buckets. Will volatility cool off or volatility will keep on expanding the day, right? So there is no specific thing on the day of the budget. This is the only one strategy which I have to do. It's not a strategy which are based on IV cool off or taking limited risk for long or short, buy call or buy put, or deciding a range, either short strangle or taking a hedge. Does that answer your question, Rajesh? Apologies, your question was 10 minutes back, but I had to scroll. Yes. Any other questions?
No, sir, not yet.
Fine. So, Rajesh, give me yes or a no if your question is answered. Right? So now we'll have a detailed Q&A. So we have a brief 2 minutes interruption, right? But we have not missed out on any explanation. The short strangle which we are discussing, I discuss this once again. So yes, we are open for the Q&A now. If any questions regarding this strategies or IV or anything which you want to know specific to what we have discussed today, please send your questions. आपको कोई भी IV related, strategy related, construction related, कैसे strategy का pay off देखना है, whatever you have, put your questions. आपको questions पूछ सकते हो. I'll answer all the questions. Now we are open for Q&A. Yes, Deepak ji. If any questions comes, let me know.
Yes, sir, we have a question from Mr. Sanjay, just assigned.
So, just assigned. Let me see, Deepak ji, where the question is. If you can put it, I would be
Yes,
thankful.
yes. He's asking, can we have a short recap of all strategies?
Definitely. So the question is, let's have a short recap of all the strategies. Definitely. So let's divide into two parts, directional and non-directional. Non-directional with a hedge. If you are expecting market to go up substantially budget day or post budget within the expiry, it's buy a call, the risk is limited, the reward is unlimited, which is long call. If your view analysis is that market will go down, things have turned bad, buy a put, which is long put, your risk is limited because a buyer of option, the risk is limited to the premium paid and your reward is unlimited. Now, if you don't want to take which side market will go, it can either go substantially up or substantially down, right? In that case, what we have is a long strangle. Long strangle means that let market go any side, but the movement should be big one, right? In that case, it's a long strangle. So I am buying both the call and both the puts. Or if I am a buyer, my risk is limited to the premium paid, and if the move turns out to be in my favor, the reward is unlimited. Then we discussed about short strangle. Taking into consideration the straddle price range, you can add 50% to it, right? Which is selling both the calls and the puts with whatever range you have defined. Now to short strangle, I can take a hedge, which means it's a sell call and a sell put. Short strangle, if I take a hedge, it becomes an iron condor, which is if I've sold a OTM call, I will buy OTM call above that as a hedge. If I've sold OTM puts, I will buy OTM puts as a hedge below that. So that's iron condor, right? So that's in briefly, I have explained all the strategies. Yes. Anybody else? Any other question? So I got thumbs up from Sanjay, which says his question has been answered. And these are the days, if you are doing your strategies, please make use of comparative premium charts. Don't see your M2M, watch it in the premium comparative charts, the way I showed you. Right? Yes,
Sir,
go ahead, sir.
yeah, we have a question from Kamlesh Kumar Sharma ji. I
Okay,
shared that question to you on chat. When we should deploy these strategies like BTST in morning or during the budget?
okay. See, strategies are to be deployed. Either you can deploy it in the morning, because if you are expecting that volatility will cool off, that means the cool off will happen the moment the budget announcement starts coming in and market starts factoring in. Fine. So there is any strategy which is either an IR condor or a short strangle is to be applied the moment market opens and as the events unfold. Post an event is a time either you do risk management or exit the strategies. Have I answered the question, Mr. Kamlesh? Yeah, I got a thumbs up from, I'm not able to see the name, but if anybody has further questions, let me know. Again, I
No
repeat,
question.
I showed you how to calculate the straddle price. Keep that range in mind. In fact, add 50% more to the straddle price, or even 100%.
So one question is from Mr. Sadadru Roy.
Okay?
Any specific IV range to buy PE or CE? I assigned that question to you.
No. IV range to buy the PE and the CE is always when premium are deflated, which means premium are less. Right now, it is highly inflated. This, like your question is, if you start tracking the IVs on a daily basis, how you will come to know that what is the deflated part and what is the inflated part, right? Right now it is highly inflated, which means if I go again, as I said, make maximum use of the Stocko InCred Money Insta option platform. If I now go to the options data, and if I go to my option chain, this is option chain of Nifty, right? If I see at the money call, the IV is 17 and the put is IV is 14. So this is a substantially higher IVs. IVs at times I have noticed on a normal day are half of this. Got it, sir? When IV shoots up like this, buyer of an options do make money in intraday scalping, but not on holding. So once you start using the Stocko InCred Money platform, and if you watch the IVs on a daily basis, see the PCR charts, the trending OIs, and all the statistics, and you will get a historical perspective of this. So because we track it on a day-to-day basis, the 17 on call and the 14 on put on Nifty at the money IV to me looks substantially inflated IV. The IV are very high. fine. Yes. Anybody has any questions? And you can watch this IV in option chain.
Yes, sir. There is one more question I assigned to you. How do you actively manage the positions?
Actively manage the positions. Question is coming from whom? He has to be a bit more specific because I don't know whether it's a long call, long put, short straddle, short strangle, or an iron condor.
Not getting the name, sir.
Okay. So please be very specific which strategy you want to know how to manage from what we have discussed all the strategies today.
No response, sir.
Okay. Then we can take the next question.
Sir, I think we have done with questions.
Okay. So the question and answers round is formally over. Can I announce that, Deepakji?
Yes, sir.
Okay. So it was a great session, friends. Today we had a good discussion on strategies. The key today, two takeaways are IV and straddle price and strategies based on that. But we have a poll right now, and the poll is for you only. So Deepak ji will make the poll live. Spend few seconds to answer the poll. To tell this poll will tell us how we should structure the webinars, include more topics, whether it's on trading, technical analysis, option strategies, events days, uh, and so on. So yeah, Deepak ji, you can make the
Yes, sir.
poll live.
Yes, sir. That survey will be coming to the screen as soon as we are ending the session.
Yeah, the moment the session is ending, the poll will come onto your screen. Make sure you take the poll. Don't skip the poll. That poll is for you and not for me. Remember that. Yes, Deepak.
Yes, sir. I think on that note, we can conclude the session.
Yeah. Thanks everybody and have a nice day. Keep a watch on IV, keep a watch on straddle price. Make active use of the Stocko InCred Money Insta option platform for construction of strategies, see comparative charts, and also to see the payoff graph what we have discussed today. You will get all the things right now over here, which means what is the maximum risk, what is the maximum reward, what is the Vega, which is the IV which we are discussing. All information is there, and the subject requires more and more webinars. The more you attend, the more we discuss, the more we explore, the more expert you become in this subject. Yes, on that note, end the webinar. Thanks and have a nice day, everybody.
Thank you, sir. So I am ending the session, sir. Thank you.
Yes, so formally we are ending the session for the day, and please make sure you take the poll.